Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, and we are now at February 2nd, 2021, just getting on to 6 p.m. Central Time. Pretty casual today with my sweater. I was out shoveling again and putting salt down. We're about to get a deep freeze hitting Chicago. So with all the snow that we've had and the little bit of melting, ice is forming. Got to put this down. They're telling us we're going down under freeze for quite a bit of days here now. That'll move east. So not only is New York and Central Park got 17 inches of snow today, they're about to get the cold that we get. So get ready for it. It's not pleasant, and that's why I'm like this. I was outside getting my house ready. All right. So let's talk about what we've got. There was a meeting yesterday between President Biden and 10 Republican senators. It went nowhere. They're making a deal that's 1/3 the price of what he wants. It's like going in and trying to buy a house. You know, if you're going to buy a house, typically a broker will tell you, put a bid in between 5 and 10% of the asking price. It shows you're serious. Now, some markets you got to put a bid in over the market, but offering a bid that's 1/3 of the asking price and thinking you're going to get something done, why have the meeting? And that's basically where I expect this to go. So the Senate did vote later this afternoon to go ahead with debate on that. You know that the presidential impeachment trial will begin on the 9th. So I don't know how they're going to juggle everything at one time. We'll find out. But my instincts are that they're going to go it mostly and loan the Democrats and try to get done what they law and what they feel they can get done will be with. And we'll see what happens. I don't see them being able to be stopped from everything that I'm seeing. Is that a bad thing? I guess not. Our economy needs the help. Once they get this done, you know there's going to be talk on infrastructure. That's got to be coming down the road with our new Treasury Secretary Yellen. She wants more spending, and rightly so. You know, the economy is going to need a shot in the arm. We're looking at energy prices up a bit today, and all this is not friendly, in my opinion, to the bond and the note markets. You know, they're inversion markets. They go opposite. When they drop, it means real rates are going up. Something to consider. Wildness in the metals, come on. You were up $2.50 in silver per ounce yesterday and down $3.01 today. You think that isn't volatile? Each dollar's $5,000 on a futures contract. So you were down $15,000. And, you know, I'm watching people and I'm getting letters. Well, where should I get in? I go, why are you looking to get in? I've been around this 52 years. There's always another plane, always another train where you can control risk. You can't control risk, guess what happens? All right. In the S&P 500, where are we? Well, we're certainly knocking on the door of what? All-time high close. You can see that. The bias is up as the market is staying over the 18-week average, and I make life simple for you. This is a close-only chart. I'm always looking for the bias of a market. The bias is up. When a market's over the 18-week average, it's up. When it's under it, it's down. It's that simple as far as I'm concerned. This 18-week average is often a number that is a delineation number. When you finally get over it, you enter uptrends. When you're under it, you've got downtrends going forward. Keep that in the back of your mind. It's a very important number. Can you apply it to daily charts? Well, I certainly do, and I teach that in my charting course. What we have here is a market that had a washout. It's come back into the resistance we had. Now, I'm going to remove the past 2 days. It's very simple to see, and I've said that that's the resistance point. The market's slipping down. The question is, does it have any legs? And between the breakdown here and this follow-through rally today, what do you have? Well, you don't have the market following through, that's for sure. And where are we tonight? In this area. But this is a difficult area. Getting through this is going to be hard. Do I think it can happen in time? Why not? Again, I think all these relief bills and other parts are going to happen. There's going to be a lot of spending. Elizabeth Warren today made it to the Finance Committee. That isn't necessarily the best thing for a lot of you that look at taxes, inheritance tax, so on, because she is not an advocate of making that a friendly job. But she's not the committee chairman. They gave her a position on the committee. When we take a look at the swing line, you have a pattern of a higher high. Now I'm going to just walk you back here. The high on this day was 38.62 1/4. I'm going to take you back another day, right here. Come on, there we go. 38.59.75. Then you get your break. Then the market comes up. At this point, you have an uptrend. You have higher lows, higher highs, and just the swing line, that is up. With this day, as soon as you took out this low, you broke the pattern of higher lows, higher highs. So that's what I'm using the swing line to see. So as the market has been coming back up, it's coming into that resistance area, but with the pattern the way it is as we're talking, even if you went through it, let's assume you went right through this number, you'd still have a lower low and then a higher high. That is not the definition, at least my definition, of an uptrend. What about moving averages? We just said yesterday, I said, I wouldn't be surprised that you're going to fight a battle at this 18-day average. You got under it and coming back to it, you often don't just go through it and run away. Could it happen? Yes, but the probability is, see how it fights at it? That's what I'm looking for. So it wouldn't surprise me if you get some pullbacks in this market. So I see a market that has upside bias, no trend, and when I come to looking at the Bollinger Band, the resistance is going to be 38.76. What do I mean by that? If you look at these black bands, they're called a Bollinger Band, which is an algorithm designed to stay within them. Think of this as your resistance point, your support point. You only stay out of the bands 5% of the time. The bigger the swing leading up to approaching the band, the less likely it is to be able to follow through over it or under it. So as you broke all this way down, I have been saying in these videos, watch out. I think the pros have taken their money off the table. They jammed their stops down, and I think they got stopped out finally of their final positions. I don't think they have anything. I think the market's sort of in a random walk right now. In momentum of the slow stochastic, it's still pointing higher. So I have the bias up, that is friendly. I have momentum pointing up, but momentum's got a reading of 71.83. Any reading by my definition in the slow stochastic that is over 70 is overbought. You need to get the market getting both numbers that make it up over 80 going sideways for several days or more to say it has changed that from being overbought to locking in a bull trend. We don't have that. So I'm looking for the market to have serious issue at a new all-time high, admittedly, if it gets there, 38, let's call it 76.75. We'll see what it does if I'm right or wrong there. When we come to the NASDAQ, already overbought. Similar to the S&P, you had the lower lows, now you've got the higher high, lower and low, bias up. Next resistance point, 13,630. But given all the craziness we've just watched together, would you think these markets are knocking on the door of new all-time highs? They are. If you go to the weekly charts, a lot of this noise isn't there and the trend has stayed up. I do my weekly charts often on the weekends. I don't do them all the time on YouTube. I certainly do them every Saturday for my paid subscribers, and I don't miss a beat with them, and they know what I've been talking about. Now let's go to the Dow. Remember the theory I just told you. Often if a market gets to that Bollinger Band, it's hard to push out of it, especially if you're coming from a wide range in front of that. You've really come from the upper band to the lower. First stopping spot is often the 18-day average for the fight, and that's what you're doing right now. This market's still in a downtrend. It is not overbought. Momentum's up. So what I think the professional trader is doing is they're looking at sell zones at 30,720. They won't want this high to be taken out, and if we want to see what that high exactly is, it's 31,017. That would break the pattern of lower highs, lower lows. So I think they're hitting their zone that they're probing the short side, seeing what's on the downside here. It could be back to the 30,044 level. In the Russell, we have no trend. Only one market, the Dow, is trending. The others are not. You have a lower low and a higher high, and you're fighting between the 18-day average and that lower Bollinger Band. This is one of the few markets that has also come back to the lower Bollinger Band and hit it. Most of them, if I go back to them, you hit it here, They haven't hit it in the NASDAQ in a long time, and the S&P. So what's been the strongest of the markets? Right here in front of you, the NASDAQ, and all the rest, they haven't hit these lower bands, most of them, in months. The Russell price since November, and one of the others there. In the VIX cash, got up to the upper Bollinger Band, and what did I tell you? Each time, and I've been pointing it out, you've been very short-lived as the market has then turned around and made a run back to the key averages. The fact that we've got the 100-day and the 18 so close, I'll use the 100-day it hit today as the main support. So what is the trend in the market? Well, first, let's do this. The bias is up because you're over the 18-day average. You don't have an uptrend any longer. You have a lower low and a higher high. No trend and momentum pointing down. That flurry to the upside that GameStop, AMC, COS, and some of the others created, it's all gone. When we come now to the T-bond market, looks to me bearish in terms of the swing line and the bias, but you're too oversold to probe the short side. As soon as you get down like that, it's very difficult. Could you hit the lower band? Of course you could. But when you're really oversold, do you think you're attracting new money in the market? I don't. I think you have to embed the market. But what the market is telling us is it's looking ahead, and the Fed is going to have a harder time keeping rates lower than it is going to add money to breaking them. And the market keeps telling us that story over and over on the charts at least. In the note market, not as much. Remember, you got different parts of the curve yield at work here. But I think the pros are probing right here, right now, the short side. They have the swing line down with lower highs, lower lows, momentum down. The market is trading at or just under the 18-day average. I think their risk is going to be about 10 points back to the 137.10 level. And if they can press it, maybe they can get it down to that lower band. We'll